What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Tuesday, February 20th. So make sure you remember, guys, the market is closed on Monday in observance of President's Day, so don't show up early Monday morning ready to go, ready to trade. Nothing is going to be moving, so we're looking ahead toward Tuesday. It's going to be a long weekend of chart analysis here on the Roensch Capital Charts channel. Please subscribe. I appreciate it. Let's take a look. So Friday was a pretty big day here for the market, for the S&P. We gave up 500 here on SPY. You know, understand that, of course, SPY is going to correlate with the S&P 500 with slight variation. So, for example, if you take a look at the actual, at SPX, the S&P, you can see that we actually closed just above 5,000 on Friday, yet SPY gave up 500. So we'll take a look at this one. First, I want to start on the intraday 1 minute, because of course, you know, I'm a scalper at heart. Scalping is what I do every day. So I'm always watching SPY as a primary candidate for intraday opportunity to generate some revenue. Now understand, this is a big mistake that a lot of intraday scalpers and day traders make. It's really tough to just trade SPY all the time and make money. We have to only trade setups that have edge, right? And stocks that have edge on any particular day. So ideally that's in-play stocks, and even less common than that is just in-play setups, right, themselves. So for example, the majority of my playbook are setups that really have the best edge only on stocks that are in play. Fresh news catalyst, big elevated relative volume, right? Trading around a huge level with elevated volume. But really, I still trade SPY relatively often because there is a backbone setup. That's a part of my playbook. It's the primary setup that I teach to members in the Roensch Capital Gold server. If you want to take a look at that, it's the first link in the pinned comment. But that's a setup that I developed, and I call it the repeat offender. And it has, over time, a lot of edge on, even on SPY, just on any given day, even if the market itself, the S&P, isn't necessarily in play for the rest of the setups, the majority of the setups in any given playbook. And just really quickly, what I mean by that is, you know, I think most traders will admit this. The truth is, if you take any trader on the planet, the best of the best, and you tell them you can no longer select your tickers, you have to only trade SPY every day. You have to only trade Apple every day. Okay? And I'm not necessarily talking futures, right? I'm talking like you have to trade stock or options in SPY, and that's all you can trade every day, and you have to trade every day. These are the best traders on the planet, and they'll be the first to tell you 99% of the time, they're just going to lose money over an extended sample size, right? Of course, not 99% of days, but over time, they will, majority of them, lose money. And that's because the market, 99% of stocks in the market on any given day, they're too random to have edge in the majority of setups, okay? Now, again, like the setup I developed called the repeat offender is an exception to that, just because it has such great edge. The setup itself is in play, but it only hits on certain tickers each day, right? It's not going to hit on every ticker. So looking at SPY, it's a very common one that I'll trade using that particular setup. It's just, unfortunately, the market itself wasn't really so in play. That's okay on Friday. A lot of days it is. Friday it really wasn't. And as far as repeat offender, we saw this big dump off early off the open that widened out this hard channel and didn't really provide any good setups of that particular style. And that's okay. So let's move on here and start looking more to Tuesday. We'll start by looking at the 5-minute chart and trying to get some context around changes in volume that are really obvious that occurred around big market changes, big market moves. Something that tells us, okay, clearly the majority sample size or a bigger sample size of the market agrees with this sentiment over the opposite. So you saw we had this move in a pre-market off of data, okay? That was a downside move. Pretty decent volume, but we had data, so that's not unexpected. Relatively big volume off the open. We saw an increase in bullish volume, on this bounce here from this decent volume dump off here, midday or mid-morning, I should say. But aside from that, I mean, sure, we got some big volume through power hour. That's not to be unexpected, and it was kind of mixed regardless. We did see some increased volume here on this dump off candle, okay, at about 2:45 p.m. Eastern time. Hey, bulls, just understand, okay, always understand the psychology of your enemy, so to speak. The bears are going to look at that, and they're going to say, that's right, bigger sample size of the market agreed with my sentiment in that particular point in time. Just understand that, bulls. And, aside from that, that's really all I can pull out of this 5-minute chart here from Friday. So let's start looking toward levels that I'm going to be keeping a very close eye on come Tuesday, starting with the 30-minute chart with the most popular technical indicators we can possibly use. Remember, this is all a self-fulfilling prophecy. I firmly believe that. That's not a net negative, right? The whole channel here, Roensch Capital Charts, is dedicated to charts, so clearly I like the TA, but that's just my firm belief, and that's the only way I would want it. Keep it as simple as possible, okay? Using the most popular 50 period and the 200 period here on the 30-minute chart, and we'll do the 4-hour and the daily as well. Clearly the 200 period's in play. So is the 50 period, okay? So on the 30-minute in particular, that $500 region, of course, is huge. Let's just ignore that for now because we're not on the daily yet. On the 30-minute, what I'm looking for from a bullish perspective, reclaim that 200 period, that gray line, make our way up toward that 50 period. Ideally, get above the 50 period as soon as possible. If you're a bear, one thing's on your mind here looking at the 30-minute chart, fade as hard as possible off of that 200 period and just get down, okay? Fade off that 200 period. Ideally, you don't even want to see a retest of 5, especially not the 50 period. All right, just fade downside off that 200. Now let's move on here to the 4-hour chart and take a look. Clearly that 50 period here on the 4-hour is very much so in play. You can see we're basically riding it right now. What I want to see if I'm a bull, bounce back above that 4-hour, continue this thing moving upside, allow the stock to move upside with that. And if I'm a bear here looking at the 4-hour chart, break downside, fade hard below that 50 period. Very simple here on the 4-hour. Okay. Most important chart of all, that's going to be the daily. All right, looking here at the daily, you can see that the 50-day moving average is down around 480. Not really like immediately in play, but that's okay. What's the most simple story here? The simplest story, in my opinion, with my belief of how TA works, self-fulfilling prophecy, the simple story is always the right story. Okay, what's the simple story? Well, it's $500 a share, right? That is the biggest psychological level we've seen on SPY in years, maybe ever, up until this point. And if I'm a bull, I have one thing on my mind. Get back above and reclaim $500 a share, right? Ideally crack all-time highs, but that starts with reclaiming 5. And if I'm a bear, I also have one thing on my mind. Just fade, just stay in the 4s. Fade below 5, treat 5 as a resistance every time we test it, and fade as hard as possible downside. Okay? Discourage the bulls, encourage the bears is what the bears are thinking here. Let's take a look at the options chain and start getting an idea of, this is all from Friday, of the options bias that we had heading into Tuesday, because this is all, of course, from Friday, so it's going to be positioning as we head into Tuesday's trading day. So looking at this here, we have a good sample size. We can get some good data out of this. 9.22 million total contracts traded on Friday. 4.13 million of those were calls. 5.09 million of those were puts, so we are seeing a slight bearish lean on the overall ratio. The short-term speculators, the 0 to 20 delta range, those are the out-of-the-money, typically short-dated contracts. 1.31 million calls, 2.29 million puts. So we are still seeing a rather heavy bearish lean in the very short term from the short-term speculators. You know what's going on here, in my opinion? I think they're betting against 500, okay? And then we go down the line here, and you can see that the deeper we get, or the closer we get to the deeper in the money deltas, and the more longer term out we go, we start leaning more and more bullish, okay, which is very common on the S&P, on SPY, which makes sense, of course, given the market's history over time. Listen, if you guys like when I cover the overall market kind of here, like SPY, ETF, the S&P, Let me know in the comments section. I want to know if you guys want to see me continue to cover this on most days or even every day. Let me know. Also, if you got value out of this, please subscribe to the channel. I greatly appreciate that. My goal here is to hit 1,000 subs by Market Open Tuesday. I think we can make that happen with your help. Appreciate you guys, and I'll see you in the next one.